You just landed in Canada. You need a car, and then you get your first insurance quote, and the number shocks you. New permanent residents in Canada are routinely treated as brand new drivers by insurance companies, even if you have 10 or 15 years of safe driving history from your home country. In the next 8 minutes, I'm going to walk you through exactly how to get your Canadian driver's license, how to avoid the new driver insurance trap, what a car actually costs all in per month in Canada, and whether you should even buy one right now. Let's go. Before we get into how to buy a car, let's talk about whether you should right now. And the honest answer depends entirely on where you live. If you're in downtown Toronto, Vancouver, Montreal, or Ottawa, the transit systems are strong enough that you genuinely don't need a car in your first year. Use the time to build your credit score, fund your TFSA, and grow your emergency fund. Because as we covered in video 34, a car in Canada costs $700 to $1,400 a month all in when you add up car payments, insurance, gas, parking, and maintenance. That's $8,400 to $16,800 a year. Money that could be compounding in executive inside your TFSA. If you live in the suburbs of a major city, or in a smaller city where transit is limited, a car may genuinely be necessary. But wait at least 6 months if you can. You'll have a better credit score, a more stable financial base, and a much better negotiating position. Step 1 before you even think about a car. Get your Canadian driver's license. How hard this is depends on where you're from. If you're from the USA, UK, Australia, France, Germany, South Korea, Japan, or about 15 other countries that have reciprocal license exchange agreements with Canada, you simply visit your provincial licensing agency and swap your foreign license for a Canadian one. No test required. If you're from a country without an exchange agreement, which includes India, the Philippines, Nigeria, Pakistan, and most others, you go through the provincial graduated licensing system. In Ontario that means the G1 written test, then the G2 road test, then the full G. It takes at least 12 months minimum. Start immediately when you arrive. And critically, get an official driving record from your home country translated into English. This document can waive waiting periods in some provinces and is the most important tool for lowering your insurance premium. Here is the insurance trap that catches almost every new PR. When you apply for car insurance in Canada as someone new to the country, most insurers treat you as a brand new driver, regardless of how many years you've been driving safely abroad. The result, you can pay $4,500 to $6,000 a year in insurance premiums in a province like Ontario, compared to around $1,800 for an experienced Canadian driver with similar circumstances. This is the most expensive financial mistake new PRs make when buying a car. But here's the fix, and it can save you $1,500 to $2,500 every single year. Before you leave your home country, or immediately after arriving, contact your previous insurance company and request 2 things. An insurance experience letter confirming your years of coverage and claims history, and an official driving record from your home country's transport authority. Bring both. Submit them to every insurer you get quotes from. Some insurers specifically recognize foreign history. Others don't, which is exactly why getting multiple quotes is critical. Here is your step-by-step plan to get the best possible insurance rate as a new PR. Step 1. Get that insurance experience letter and official driving record before or immediately after you arrive. Step 2. Get quotes from at least 3 to 5 insurers. Rates vary by hundreds of dollars for identical coverage. Step 3. Work with an insurance broker. In Ontario, brokers are legally required to offer you the lowest price from the companies they work with. Step 4. Bundle your car insurance with your tenant insurance from the same company, typically 10 to 20% off both policies. Step 5. Enroll in a telematics program. Safe drivers see significant discounts within months. Step 6. Choose a modest, sensible vehicle. Insurance on a 2022 Honda Civic is dramatically cheaper than insurance on a luxury or high-theft vehicle. Let me show you the true all-in monthly cost of a car in Canada. Using a 2021 Honda Civic in Toronto financed over 5 years. Car loan payment around $500 a month. Insurance as a new PR with documentation roughly $220. Gas about $130. Parking $100 to $200. Maintenance $100. License and registration $20. Total, over $1,070 a month minimum. Compare that to a TTC monthly transit pass at $156. The difference is over $900 a month, $10,800 a year going to a depreciating asset instead of your TFSA. This is an argument to be very deliberate about timing and to make sure your income supports it before you commit. Should you buy new, used, or lease? For a new PR in Canada, the answer in almost every case is buy used. A new car loses 15 to 25% of its value in the first year alone. A 3 to 5-year-old used car has already taken that depreciation hit, costs significantly less, and is cheaper to insure. Leasing sounds attractive because monthly payments are lower, but leases come with strict kilometer limits, and if you exceed them, the per kilometer charge at the end can be very expensive. Buy a reliable 3 to 5-year-old used car with a modest loan and a term you can pay off in 3 years or less. Getting a car loan as a new PR requires planning. Your best options in order of cost. First, a credit union. They look at your full financial picture and their rates are usually lower. Second, your existing bank with a Newcomer program. RBC and Scotiabank both have products for new PRs. Third, dealership financing. Convenient, but rates for new to Canada buyers are often significantly higher. Get pre-approved before you set foot on a lot. Walk in with a financing offer already in hand. And avoid any dealer that advertises no credit check financing. The interest rates are predatory. Ontario, BC, and Alberta have exchange agreements with the USA, UK, Australia, France, Germany, Japan, South Korea, and others. If your home country isn't on the exchange list, which includes India, the Philippines, Nigeria, Pakistan, China, and most of the world, you go through the graduated licensing process. Book your G1 written test on your first day in Canada. It starts the clock. Even without an exchange, submit your official home country driving record. Some provinces use it to reduce the G1 to G2 waiting period from 12 months to 8 months. Here is your complete car buying action plan. Check if transit covers your daily needs. Wait if it does. Day 1. Book your G1 test. Before you leave home, get insurance experience letter and driving record. Build credit for 6 to 12 months. Get pre-approved by bank or credit union. Get 3 to 5 insurance quotes using Ratehub.ca and a broker. Buy used, 3 to 5 years old. Bundle tenant and auto insurance immediately. Every month you delay, more credit built, lower insurance rate, stronger position. Here is the summary. A car in Canada costs $1,000 to $1,400 a month all in. Make sure your income actually supports this. Your insurance experience letter and driving record can save you over $1,500 a year on premiums. Book your G1 on your first day. Get pre-approved before visiting any dealership. Buy used, bundle insurance, enroll in telematics. Every month you wait, your financial position gets stronger. If this saved you from an expensive car insurance mistake, hit like and subscribe to PR Wealth Lab. Comment below. Which country's license are you coming from, and has your province accepted a direct exchange?